This is Jeff Cooper with the Daily Market Report coming to you on Tuesday, August 21st, about an hour before the open. In this video, we're going to take a look at the structure of the S&P, the NAS, and the DJIA as they all churn into the anniversary of some historic tops, 1929, 1987, and the return rally test failure in late August 2000. As subscribers to my daily market report know, August 8th was a projected turning point in my work. A daily S&P here shows an island top right here in that time frame with a decline to 2800 followed by a push back up into this gap. Now the gap has been offset, so the presumption is a continuation. However, as we will show right here, a monthly chart, let's go to the monthly S&P. A monthly chart here shows a big picture 5-wave structure. 5 waves is typically a culminating structure that warrants caution. It indicates a final 5th wave from the 2016 low right here. It's 1 up, 2 down, 3 up, 4th wave correction, and we're in a 5th wave potentially. This 5-wave structure from the 2016 low is itself the 5th wave from the 2009 low. 1, 2, 3, 4, and this whole advance from the 2016 low is the 5th of this entire bull market. At least that's the conjecture. A new high here, going back to the dailies, a new high here will satisfy a 5th wave. Theoretically, a run for the roses could play out to just over 3,000. I say 3,000 because that satisfies a roughly 100% increase from the 2000 and 2007 1550 1576 bull market tops. So there's some good symmetry there. However, if we were going to see a run for the roses and a final fling and a 5th of a 5th, and we were in a runaway move a la 1929 and 1987, the market wouldn't be churning here. It isn't happenstance that the S&P held 2800 last week. This ties to the March recovery high right back here, the recovery after the February plunge. And it also ties to the low of the month. This is the August 2nd low for the month, which was an outside up reversal bar. So now we have an important double bottom right here and here at 2800. Consequently, a decline below 2800 suggests a 5th wave failure. Let's pull back the lens again to take a look at that monthly structure. And I'm going to zoom in a little bit. So you can see also here a trend line from the February 2016 low ties to 2800 this year. You can see that a break of this trend line, these are little Pinocchios back in the first quarter here of this trend line, and it recovered, but we still haven't made new highs. So a break now of 2800 is the first red flag that this important trend line of this entire structure, this 2.5 year structure, is going to snap. While the S&P is testing its August 8th cycle high, the DJIA has traced out a megaphone top. Let's take a look at the Dow. And we want to go to the dailies. So you can see this 5-wave structure has traced out what is called a megaphone or broadening top. And this is in sync. If I pull the lens back here, you can see this is in sync with a test of the March high again, just as the S&P is flirting with its March high. So you'll notice that this broadening top formation, this megaphone formation, is well below the record January all-time high. Now let's go to the NAS. And I want to look at an hourly. The NAS hasn't seen a new high since July 25th. The hourly here shows a potentially bearish third lower high. Here's a test of the July high. So you have a test of a test. Here's the July 25th high. Right here, here's an initial high on the hourlies. Sharp pullback, test failure, sharp decline following that test failure, a run back up for a test. So you have a possible test of a test, and that is followed by 3 consecutive or a series of 3 lower highs on the hourlies. Sharp declines, fast moves to the downside often follow third lower highs. Now the NAS could break out above this hourly 3-point declining trend line right here, but notice that a rising trend line from late July right here ties to the bottom of an hourly pennant from last week. So here you have this little hourly pennant here, and with a trend line around 7,800 or just below, just at 7,800, and this larger support coming in just below that. So if this third lower high is significant and momentum picks up to the downside, we could see an accelerated move on a break below these 2 trend lines. Drilling down to the N in FANG, Netflix for guidance, which was the first tooth in the group to get pulled off its perch, shows a rally attempt started yesterday. So let's take a look at Netflix. First, we'll look at the dailies. Monday morning's daily market report showed a daily Netflix reflecting 3 drives to a possible low. You can see that right here. Markets tend to play out in threes. Now, while the shorts may have been waiting for a picture-perfect test of the 200-day, the 200-day in Netflix hadn't been tested since 2016, right around the time of the election. So, as I said, while the markets may have been waiting for a picture-perfect test of the 200, the market seldom accommodates. And after a first-hour low, Netflix triggered an opening range breakout. Let's take a look at the 10-minute to see how this could have been played. So once you knew there was a big picture, possible 3 drives to a low playing out, you can see that Netflix put in a first-hour low, but you didn't know that until you got an opening range breakout. The way I define an opening range breakout is a push either above or below the first half hour's range. In this case, you had an opening range breakout to the top side above the first 30 minutes high, and this coincided with a gap reversal after this first hour low. So putting these three pieces together perpetuated a strong rally, as you can see. So once this opening gap to the downside following the three drives on the dailies played out, you had this gap reversal, and it's an authoritative bar on the 10-minute here, and you never even get a pullback to test this level, which typically would have been the case, and that suggested a runaway move intraday. First resistance on Netflix, we'll go back to the dailies. So Netflix is going to be, I think, good guidance for the not only for the FANGs and the glamours like Tesla, but for speculative sentiment, seeing whether we're going to see a final fling or whether we're going to roll over. As I said, first resistance ties to 342 and the overhead 20-day moving average right around here, this red line, which ties to the top of a little trend channel. Clearing that level suggests a possibility of a 50% retrace, which comes in at 367. Now you can see that the blue line, the 50-day moving average, is rolling over. It's now at around 372, but by the time price moves up, if it does, in fact, it could be at around 367-ish. At the same time, Netflix is satisfying a 50% retrace. So bottom line is, if we get a back test in Netflix of the 50-day combined with a 50% retrace, you've got a powerful 50-50, what I call a 50-50 sell setup. And this could be an important inflection point for the market if this plays out. Bottom line is, the behavior of Netflix here is going to have a lot to say about speculative sentiment in this important time period going into the end of August. Appreciate your time. Thanks for listening.